Absolutely insane that Nvidia is going from some, company that only absolute nerds knew about. It was a company a couple of years ago, and it's about to become the largest in the world. A spectacular run, one for the history books, to say the absolute least. What's up, apes? Welcome back to another edition of the 𝗙𝗟𝗡𝗚's daily podcast of the day. Thank you all for joining us here once again on this beautiful Monday, October 14th. 6:32 p.m. Just changed to 6:32. We appreciate you all joining us here on the world's most popular and influential podcast. Your favorite podcast, really everybody out there's favorite podcast. Nobody ever talks about it because it's one of those things that's just so ubiquitous that it kind of goes without saying at this point. So if you're wondering why we're not on CNBC and Bloomberg every day, that's exactly why. It's just, so popular that everybody's already aware of it. It's already priced in, really. Anyway, let's go ahead and start talking about some of the stuff that you guys care about here. The S&P 500 was up 77 basis points for the session here today. Kind of a nothing, meaningless day. There wasn't really any big news that was going on anywhere. There was, it was a painfully average day, painfully mediocre, which would be the title of a book if you wrote one about my life, but that's what markets were like for the day. So we had a 77 basis point return for the S&P 500. The NASDAQ was up 87 basis points. The Russell 2000 up a cool 74 basis points. Not that anybody cares, but the Dow was up 47 basis points as well. It's one of those days where there was really no news driving equity prices, but it was really just like the market's upward bias was put on full display here today. So generally markets are going to have an upward bias because most investments have a positive expected return. Otherwise, you wouldn't really be making them. So most of the time you expect money to be created. We generally anticipate that the future is going to be better than the past. Like, do we think 2024 is better in terms of, purchasing power and economic livelihood and really just quality of life than it was in 1924? Yeah. So that's exactly why markets tend to have an upward bias, and that was put on full display here today. Meanwhile, the WSO portfolio was smack dab in the middle of all those performances. We were up about 76 basis points for the day. So right in line with S&P 500, underperforming by 1 basis point, which makes me want to fucking kill myself, to be honest with you. But nonetheless, it is what it is, and we won't be firing the entirety of the analyst team here today. That brings our total year-to-date performance up to 13.77 basis points, underperforming NASDAQ, S&P, but still beating the Dow and the Russell. And that made our portfolio actually look like a phone number here today, not because of the amount of digits in the portfolio, but just because it starts with 1-800, which I think is pretty damn cool. So a toll-free number, if you will. All right, let's go ahead and move into some of these banana bits for the session here today. So Nvidia, speaking of the market's return, one of the big reasons why the indices in the alpha portfolio was up big today is because Nvidia was up about 2.43%. So that brought Nvidia's total market cap to just under 3.4 trillion. It's at about $3.38 trillion right now. Apple, ever heard of them? They are at about 3.5 trillion. So there's currently less than a $200 billion gap between Nvidia becoming the world's most powerful company in the world. So powerful, most valuable company in the world. So Nvidia could become larger than Apple as early as this week. It could happen tomorrow. If Nvidia has a standard up day of, if Nvidia's up like 5% and Apple's down, 2%, like that could put them on even footing at that point. I haven't done the math. I'm just kind of thinking of it, but still absolutely insane that Nvidia is going from some company that only absolute nerds knew about. I was going to say absolute nerds and tech analysts, but that falls into the same category. Only absolute nerds knew about this company a couple of years ago, and it's about to become the largest in the world. A spectacular run, one for the history books, to say the absolute least. Meanwhile, we thought that all this fucking nonsense about the Paramount battle was going to be over. We thought that the merger was going to be done with Skydance, and that was the last we'd hear about it. Absolutely not. It's really just getting started because there's a bunch of legal challenges that are going to be thrown this way. Not considering certain deals bad for, basically just bad for shareholders by not considering some of the other deals that were out there. So it's a whole situation. If we have time, we'll write about it at some point here this week. But honestly, I'm bored by the whole thing. So we'll see, only if it's something that you guys want us to break down. Meanwhile, Microsoft a couple of weeks ago tapped on Constellation Energy to fire up 3 Mile Island once again so that they can use the nuclear reactors there to power their data center demand for AI applications. Google is going in a bit of a different direction. Now, there was talk that Google was going to tap on Vistra Energy to provide the exact same services. Vistra Energy, by the way, has a better return year to date than Nvidia does. But they went a totally different direction. Google went ahead and tapped on a startup that's called Kairos Power to develop small-scale nuclear reactors to power Google's artificial intelligence data center demand as well. So a little bit of a different direction. Microsoft is going big, whereas Google is going small and very localized. So we'll see if there's any kind of big difference in these going forward. Meanwhile, Vice President and Democrat nominee Kamala Harris, gotta love her, right? An absolutely infectious laugh, if you ask me. Definitely not incredibly cringe-inducing or frustrating at all. Totally infectious. Love to hear it every time I had the misfortune of seeing her on the screen. Anyway, don't worry, I hate Trump just as much. But fuck, I'm getting too political here. Don't take any of this as political opinions. We don't have any political opinions at the Daily Peel. But VP and Democrat nominee Kamala Harris did come out here earlier today on Monday and propose a series of economic proposals that seem disconnected at the most charitable way to describe it, just kind of an amalgamation of random bullshit that'll probably get voters excited. But things like legalization of marijuana, which won't happen, I promise you that, a concept of a plan around how to regulate digital assets, wink wink, for anybody that was misfortunate enough to watch the presidential debate, and then also this weird kind of plan to offer up to $1,020,000 loans that are totally forgivable specifically for black male entrepreneurs. I don't know if that was specific to like the marijuana space or something like that, but either way, some kind of a loan forgiveness program to get people to start businesses. So what's not to love about that? Meanwhile, Sherwood News is going deep while nobody else is because nobody's having sex anymore, apparently, and that goes for the United States and across the entire world. They're talking about why nobody's having sex. Well, why nobody's having babies, I probably should say. But I still don't really know where babies come from, but I've heard that there's some kind of a link between sex and babies, so I guess that's kind of a driving force right here. Finally, our last banana bit of the day. God, it's taken us a while to get through this. Canada and India are beefing. Canada is just poking the bear that is India as a burgeoning global empire, or a burgeoning world power. The two sides are beefing very heavily, kind of like Kendrick and Drake. Now they're starting to expel each other's diplomats. So it's becoming an ugly scene between India and Canada, but hopefully the two... Does Canada have nukes? I'm pretty sure Canada has nukes. I know India does, but if India does, Canada probably does. But either way, we like our nuclear-powered countries to be friendly with each other, but, you know, I'm not their fucking dad. I don't care what they do as long as they don't blow up my house. Let's go ahead and move into some big economic macro stories of the day. Our macro monkey today, we were talking about going down swinging, which actually might change because I wrote that before I wrote everything else in this. So that title might change tomorrow, but we're talking about going down swinging for tonight. Really does feel like we can't have fun in the United States economy anymore. These amazing American traditions like absolute degenerate gambling, drunk driving, even reaching for an officer's service weapon, it's heavily frowned upon these days, and it's ruined by messaging like bet responsibly or don't drink and drive and all this other nonsense. Is this what the founders wanted? Is that what George Washington wanted you to hear on a daily basis? I really don't think so. That's exactly why the free and independent thinkers, we are just a bunch of absolute handsome Sigma free independent thinkers over here at the Daily Peel. So we want to kind of move the country in another direction. Step one, I think, is going to be to waste as much money as humanly possible, because not only does society need you to, but much more importantly, the economy needs you to as well. Bank of America came out late last week, and we're just getting a chance to talk about it, with their latest consumer checkpoint for the month of September. Now, in September of 2024, total consumer spending increased 0.6% compared to August, but actually declined 0.9% from September of 2023. So if you know anything about the U.S. economy, you know that declining consumer spending on an annual basis is like getting stage 4 brain cancer. It's kind of like the worst possible thing, but really only if this becomes a trend. Now, one instance of declining on a monthly basis, that's fine. We can kind of roll past that. That's fucking water on a duck's back, as my mom would say. But if this was a continued trend, then we would start to get concerned. So right now, we're not necessarily super worried, but we're worried about what this could turn into. So once again, we saw a 0.9% decline on an annual basis when it comes to consumer spending when monitoring specifically debit and credit card spending at Bank of America. Now, Bank of America, I don't know if you've heard of them. They're a pretty big bank, so it's kind of a good... Like, obviously, it's not the entirety of the U.S. economy, but it's a phenomenal sample for the U.S. economy, so we can basically extrapolate this to the rest. What's the central limit theorem, like 30? I think Bank of America has more than 30 customers. So, in case you don't know, the U.S. economy relies on consumer spending like fucking Lance Armstrong relies on steroids, or like, you know, cops rely on drunk drivers to meet their quotas for the month, or something like that. whatever analogy you want to go with. Let's just go with that. But the U.S. economy, 70% of GDP in any given year comes directly from your wallet. That's consumer spending. And that's why the economy needs you to start racking up as much personal debt as you possibly can so that we can keep this beautiful machinery going. Now, part of the decline on an annual basis was attributable to Hurricane Helene, not Hurricane Milton, because it came in October. Shout out to all of our southern apes out there, by the way. I hope you guys are doing well. But we did see a huge decline in the spending in states including Florida, Georgia, North and South Carolina, and Tennessee at the end of the month, and that brought down the entirety of the month. It declined from the 7-day moving average of spending declined 4% in the last week of September, whereas for the rest of the country, moved up 1.8%. So presumably, if all these states, which are pretty high population states, were moving in the direction of the overall economy, we might have seen an annual increase or at least flat performance. That's not what happened, so we don't have the counterfactuals to actually know, but presumably it's not as much of a problem if we exclude hurricanes. So, plus the government spending that's going to come to, kind of rebuild after these hurricanes will more than make up for that spending when it comes to the total GDP. So, what's actually driving this continued increase in spending on a monthly basis? Well, one of the biggest things is continued wage growth. So, we've been seeing wage growth that's pretty strong throughout the entirety of the post-pandemic period. We've seen it slowly taper off since peaking in about late 2020, early 2021. But we did see that decline kind of hit its trough by earlier this year. So in February, March of this year, we kind of hit the lowest rate since the pandemic. And we've seen uptick since then. Now, it's been a little bit volatile, but still moving in the right direction. In the month of September, we saw a particularly large uptick from the higher income spectrum. So those earning more than $125,000 per year. That's great to see. We love to see it. But rich people don't necessarily spend money like the poorest do. Like poor people like me and you, we'll go out there and spend every last dollar on that fucking 17-leg parlay because, dude, if that parlay fucking hits, holy shit, we are golden. But the biggest thing, lower income consumers have a higher propensity to spend because they tend to have things that they need to get, whereas wealthier people tend to have the things that they need to get. So when they get a raise in their salary, they're not necessarily just going out and upgrading their lifestyle to reach that point. Their lifestyle is kind of maximally upgraded, if you will. So they'll usually take that stuff, pay off debt, increase their investments, and do whatever other nonsense wealthy people do. So it's important, really, consumer spending is going to be driven by wage growth at the lower end of the income spectrum. While we still did see that, it wasn't necessarily as strong as the upper echelons. Now, the other thing that's pulling lower income consumer spending in the wrong direction is this huge increase in auto loan payments. So since the start of the pandemic, we've seen the median auto loan payment in the United States increase by about 30%. It's been hit by a double whammy because at the same time, we've seen the average car price. Now, note the difference between average and medium here. We've seen the average car price up 20% since the start of the pandemic. Now, I don't have to tell you very wise apes about what's happened to interest rates. So they've gone from 0 to definitely not 0. So that has increased monthly payments on cars quite a bit. And that crowds out additional spending that lower income consumers would traditionally pursue. So we've been seeing this hit disproportionately at the lower income spectrum, and now over 60% of households that make under $50K per year that have a car payment carry an auto loan payment of more than $500 per month. That is a shit ton of money to be spending on a monthly basis for a car. What are you guys out here buying? Jesus Christ, my Toyota is like 200 something bucks a month, and it's pretty nice. I call her Jazzy, I should say. I don't mean to refer to her as just an inanimate object. She's Jasmine and she's part of my soul. But it does crowd out other spending that these higher propensity spenders wouldn't necessarily be pursuing. So the only other things that we kind of want to consider are like what other asset and debt related dynamics are going on across the income spectrum. Well, if we go ahead and take a look at home ownership and specifically home equity values, it is at its highest level since 1950, with the average equity in a home that's, owned by consumers is sitting at nearly 75%, which is the highest home equity, it's the highest rate of home equity that we've seen compared to a property's value since the 1950s. So usually it's going to be much lower. Consumers tend to have somewhere between like 50 and 60% of their household value in equity in the home. Now it's, averaging near 75% across the country. Most of that is attributable to increases in home prices, not necessarily something that consumers are actually doing, but still what that does is it creates a whole lot more cash in the form of home equity that consumers can tap on in the form of home equity lines of credit, aka HELOCs. This is basically saying like, yes, I will, give the bank the bank's going to give me $50,000 and I'm going to add XYZ to my mortgage. That's essentially what you're saying is you're trading ownership of your house for cash right now. People tend to tap on this stuff when rates are particularly low. So it's no surprise to see that this has still been declining. But the other big thing is it really doesn't matter when it comes to the consumer spending side because more than half of the increases in home equity values, not home equity utilization. More than half of the increase in home equity values is coming from the top 20% of the income spectrum. So those also have the lowest propensity to spend. What they would typically do with a home equity line of credit, because usually a mortgage or a HELOC is going to be at a lower rate than a lot of other things. You could take a HELOC at 4% and invest it in the market, and over the long term, you'll earn, 7-8%, whatever it might be. Now, if you're getting a 4% HELOC right now, you would have to be Jesus Christ. But that's just kind of an example from, the past decade or so. So that's something that we might be a little bit more used to. Today, it's going to be similar to mortgage rates, so it's going to be more difficult to outperform. So what Bank of America's data suggests is that consumers that are using HELOCs are using that to pay down other higher rate debt. So it's not necessarily going back into the economy. So basically, at the end of the day, what's going on? Rich people are doing fine. Lower income consumers are struggling. Give us a fucking Pulitzer Prize for this realization. I mean, I don't think anybody's ever stumbled across this kind of data before. Like I said, consumer spending, for economy-wide consumer spending, relies a lot on wage growth at the lower income spectrum. Now, luckily, we are still seeing that pretty strongly, but that's something that we're going to want to monitor going forward. All of this is underpinned by a healthy labor market, and that's really what's driving the continued increase in consumer spending, at least on a monthly basis, even though we're declining on an annual basis. But if those damn car loans could just go away, we would probably be golden. Okay. Let's go ahead and move into some of the big stock movers of the day. What's right? First and foremost, we have Sofi Technologies. Ironic that the stock was up 11.43% here today. Markets must have heard that the 𝗟𝗏𝗚𝗏 portfolio is currently in the process of writing a report on Sofi Technologies, and that's what sent the stock much higher. Clearly, it had nothing to do with Sofi becoming the new hot couple on Wall Street, but really it's on Main Street, because Fortress Investment Group and Sofi are officially teaming up for a $2 billion expansion of Sofi's loan business. So Fortress is investing $2 billion in Sofi's lending platform so that Sofi can extend more personal loans to its members. Now, the benefit for Sofi here is that they get the origination and the brokerage fees, whereas Fortress is going to earn the actual return from these personal loans. So it's a win-win for everybody. Investors loved the expansion of Sofi's loan book, as well as the vote of confidence from a older and wiser industry player in Fortress Investment Groups. Now, moving on below to Sirius XM. Now, with Warren Buffett and Alex Cooper teaming up here, they're going to have to call this thing Sirius XXX pretty soon, if you know what I mean. The legendary duo of Call Her Daddy host Alex Cooper and, noted Daddy Gang member Mr. Warren Buffett is heating up even more today. So, Sirius XM shares were up 7.9% for the session. Probably had to do with, Buffett trying to become Alex Cooper's co-host, but that's, more rumors right now, so we're not necessarily reporting on that. What did happen, though, according to SEC filings, is that Mr. Warren Buffett, the Oracle of Omaha, purchased an additional 3.6 million shares of Sirius XM, which is now the parent company of Call Her Daddy, the second most popular podcast in the United States, where they specialize in talking about, well, let's not even go there. I think you guys all know what goes down on Call Her Daddy. But that brings Buffett's stake to a total of 108 million shares, or 32% of the radio company. Now, I wouldn't blame Buffett if he is unfamiliar with streaming services, Spotify, Apple Music, but he is horny for shares in this fucking radio company, I guess. And he claims that it's for so Sirius XM was part of the broader Liberty Media organization for a while. They just split off, and Buffett says that that's kind of what's driving the returns, but really it's that $125 million deal they just inked with Call Her Daddy. We all know that. Let's stop pretending. Let's go ahead and move on into some of our stinky rotten movers of the day. We have Caterpillar shares down 2.01% for the session. This company, I think investors really thought they were about to turn into a damn butterfly, because Caterpillar hit an all-time high on Friday, but instead it's just racking up a bunch of new haters here today, specifically from Morgan Stanley. So Morgan Stanley is Caterpillar's latest hater, officially calling the company fat and saying that they have, quote, bloated inventories. That's exactly how Morgan Stanley described the current state of Caterpillar, basically saying that the company has kind of over-ordered and overbuilt its inventory line to the point where it's not going to be able to meet, consumers aren't going to be able to meet demand for all the products that they built out. They might have to take some write-downs on their income statement, so they're kind of worried about profit margins going forward. There's a risk of destocking at the same time, where they'll just have to get rid of all of these things, and that would obviously hurt. Plus, analysts are a little bit concerned about Caterpillar's exposure to China. Now, Caterpillar, they sell things like farm and industrial equipment that people who actually contribute to society and know how to use their hands would purchase. Obviously, I don't know anything about that, despite the fact that I'm wearing a fucking shirt that makes me look like I touch grass right now. I can assure you I absolutely do not. But the stock, with its exposure to China, China does a lot of agricultural business over there, so Caterpillar is a big presence in the country. The stock has been trading quite correlated to any announcements or lack thereof announcements when it comes to stimulus in China. So if the country announces a huge package of stimulus, Caterpillar is going to go up, and if they don't, well, that's going to hurt a good bit. So shares down once again 2.01% on the day. Moving on down, we have, once again, this should just be a fucking stalwart of the What's Rotten section. We could write about this stock every single day. We have Boeing down 1.34% on the day. Business students and those fucking future micromanaging MBA associates are going to be studying this company for decades and decades to come. This is one of the most spectacular disasters in the history of American business, if you ask me. The company is falling faster than doors off of its planes do. I mean, holy fucking shit. I don't know how. I was saying a year ago this can't get any worse, and it's just non-stop gotten worse in 2024. But the nosedive on Monday was born out of the aerospace manufacturer's plans to cut 10% of its workforce, or about 17,000 jobs, axing 17,000 livelihoods, and meanwhile they're also going to further delay the company's new 777X plane model, and they're also discontinuing the 767 model. So while it's great to hear that there's going to be less Boeings up in the plane and probably more consumers making it to their destinations alive, the ongoing machinist strike is a big problem for the company still. Now, my understanding is that Boeing only wants to give them a 30% raise, whereas they're asking for 40%. Kind of seems like something you could meet in the middle on, but that's not even the biggest problem for the coming quarter. The company is taking a total of $6 billion hit to profits for the quarter because of write-downs related to the 777 and the 767 plane models, as well as the 737, not being able to get those back flying or back shipped to the airlines that will be flying them. So because of all of this fuckery that's going on with their planes, the company is going to be taking a huge write-down as if they need any more problems. Finally, we're finishing up with catching rockets as a thought banana of the day. Anybody out there who was unfortunate enough to watch any of my beer league softball team's games, the Bad News Beers, no big deal, knows that I'm not particularly skilled at tracking a fly ball. Now, if you saw me when I was 12 years old, an absolute ace out there. I was a center fielder back in the day, not to brag or anything, but today, absolutely ridiculous. There's no chance. It's like asking me to solve a fucking calculus problem. It's just not going to happen, I promise you that. So I'm very glad that Elon Musk SpaceX didn't ask me, or didn't tap on me to come and be their catcher for their rockets, because apparently that's a new position that they have open. I sent in an application, but I didn't get to the super day, apparently. Whatever, I'll be writing a strongly worded email after this. And even though I probably could have done it, it's probably good that they didn't tap on me too, because that's exactly what the company was up to this weekend. I probably would have just needed a little bit more practice. This weekend would be a little bit too soon for me to go out there and start catching rockets, but that is exactly what happened. Now, in case you haven't heard me yet, catching rockets. I'm talking about literally a rocket being caught by something, not just blowing up and going into fucking God knows where, just dumping more trash in the ocean, because that's what we need. We're actually catching these things. So what happened this weekend? Well, on Sunday, Elon Musk's favorite child, SpaceX, his satellite launch, internet connection, and Mars colonization firm, conducted their 5th test flight of the enormous Starship launch vehicle. So Starship, this is the rocket that's supposed to be ferrying people to Mars. This is the largest object ever that has taken flight. So pretty insane already. But what if I told you that upon re-entry, there was a literal arm, basically they call it 2 chopsticks is what SpaceX refers to it as, that caught the booster for the rocket on re-entry. The name of the booster is called Super Heavy, so I don't think it's particularly light, but they were still able to catch this thing. So they used a contraption that they call 𝗥𝗢𝗟𝗔𝗡𝗗𝗏. Gotta love these names at SpaceX. So when the booster re-entered into the atmosphere, literally 7 minutes after taking off, this thing, the booster for the rocket, came back down and they caught this thing. An absolute technological and engineering marvel. Very impressive stuff from the SpaceX team. But what this means for the future of the space industry is even crazier. So one of the biggest constraints with space is obviously getting there. It's pretty difficult to build a rocket that can generate the millions of pounds of force that you need to lift off the Earth's atmosphere, especially when you're carrying anything worth bringing to space. So it takes a lot to be able to get up there. So one of the biggest challenges is actually creating these rockets, because what NASA was doing for the Apollo program is you would build these things and you would send them up to space, and then the rocket would fucking destroy itself, and then you basically be chilling up there, and then they can come and get you with another rocket that they build. So it's kind of building rockets every time that you're going up there. What SpaceX is trying to do, and a key pillar of their mission, is to make these things reusable. So by making at least the boosters reusable, that's a huge step, because then they can just slap another capsule on that thing and send that baby right back up into low Earth orbit. So that's kind of the goal of exactly why SpaceX is doing this, so that they can dramatically increase their turnaround time. 7 minutes and this thing was back on the platform. In theory, you could relaunch it in fucking 15 minutes if you really wanted to. I don't know anything about rockets, so that could be wildly incorrect. But this is fucking crazy. We're able to launch this shit and then get it back down, and we'll be able to relaunch it again relatively soon. This is a huge step for the space economy. And there's, the first time that we were investing this much in space, during the Apollo program in the 70s and the 80s, for when NASA and Sputnik were going head to head, we got some of the craziest technologies that we have right now. We got GPS, camera phones, hello, what I'm talking to you on right now, wireless headsets, and even damn memory foam, and fucking freeze-dried food, and all this other stuff was born out of necessity of the space program. Can you imagine what we could be coming up with next in 2020 and 2030 and 2040? We already have companies out here that are talking about fucking ambitious, maybe drunken ideas of things like, mining asteroids and manufacturing in space and making human life multi-planetary. Absolutely ridiculous things going on. So this is the kind of stuff that we like to pay attention to, that's going to change everybody's lives in the long term. It's not going to have any effect short term, but goddamn, that's pretty fucking cool if you ask me. I totally forgot to include a quote for the day, so we'll just have to finish up with some wisdom of our own, with some advice that we can give out there. Stay in school? No, don't do that. Fuck that. Actually, our advice for the day, go out there and rack up as much credit card debt as possible. That is my quote. You can go ahead and put my name right next to it. But that about does it for us here today. There will be a quote in the written edition, so if you want to see it, I'm about to add it right now, and you can see it there. But nonetheless, that about does it for us here today. Hope everybody's week is off to a good start. Let me know if it's not, and otherwise, I'll see you tomorrow. Happy investing, happy trading, and bye now.